All right, traders, it is the 13th of May, 2017. My name is Jameson. Welcome to Behringer Trading. This is a weekly vertical bar chart of spot prices for crude. What do we have? So it looks structurally like accumulation. I was able to measure a bullish price objective, which was right around $55, $56, which we have achieved. But we have some shortening of the upthrust that was present. Additionally, we had this very debatable, indecisive consolidation that presented here for several months. I got to say that I called it was going to break downside. Pretty proud about that. I also noted that when this broke down, we have a $41 price target. So I'm actually kind of amazed that we're still going down this direction. But what do we have? So it was very bullish here in mid-November as prices actually saw a lot of demand and traded up into this range with increased ease of upward movement. But then what subsequently happened here is we had another big effort of volume, and it didn't break this, this prior level of resistance. That's significant of distribution. And then the subsequent retest here happened on no demand. There's no buyers. So there's no buyers. What's left in the equation? And that's that of supply. So then we start to see some supply that's present, and then we kind of break down here through this level of support with the expanding ease, trading at lows into the 200-day simple moving average on a lot of volume, and then we rally away from this 200-day simple moving average with pretty reasonable buying effort here. A matter of fact, with the amount of buying that we have relative here compared to what we had in November, December, it should have broke through this resistance, and it didn't. And it didn't because there was still encountering some supply. There were still some sellers here. And we can appreciate that as we rejected that level, we did so with expanding volume. This is a lot of selling pressure compared to what's on the chart here. I mean, we can look back the last 2 or 3 years, and this significantly sticks out. So there's a lot of supply. That just means that if prices even rally, it's still going to come back and test this level. There's enough weak hands present in crude that it may remain range bound. I will say that the amount of time spent in consolidation here would give us a price objective of $40 and a lower price objective of $37. And even if this is accumulation, which I believe to a large degree that it is, we still have to retest this prior level. There's enough supply here, again, that there's enough weak hands that this cannot continue higher until the bulls control the overall float. And I think this continues to suggest that prices are going to break down and retest at least this $37 area. I'm bearish on oil. If you look at the crude commit of trades report, we can appreciate that producers and users have slowly been buying. And this is I just feel like you can't teach these guys new tricks. Like, they just keep speculating that this is the lows, just keep exposing more capital. We are seeing speculators actually decrease their capital exposure. They're not as optimistic as they have been. But this is a bullish observation. I guess what I would say is that if they're wrong and they actually decrease exposure, we really will see Brent break down with some increased volatility, probably weigh pretty heavily on the markets, and kind of at least make things trade laterally, which would make it difficult to achieve those price objectives that I mentioned at 242, 246, and I believe like 255, 256. I still remain bearish here on crude. All right, so now we're looking at natural gas. This is a weekly vertical bar chart. We have very well defined and organized accumulation. We have our preliminary support, our selling climax, automatic reaction, secondary tests. Those are the 4 principles or signs that we need to suggest that we have a stopping action. The character at which that we break through resistance is with increased ease of upward movement, closing at highs with increased volatility. That's very characteristic of a jump across the creek. That means that demand is overcoming supply. That means that bulls are in control. And as we rally higher, have a sign of strength, we back test here. There's not a lot of supply that presents. And actually, we had a lot of supply present here, but the fact that it didn't break down through this level of support can suggest that it was bullish absorption, and then prices rally away. So, based on the time spent in consolidation here, we had a $4 price objective, which I will say reasonably has been achieved. Now, if we take consolidation, we measure price objective based on the accumulation here and the reabsorption from the back test, or the last point of supply. That gives us a price objective of $4.50. I think that can still be met, but this last pullback here, if bulls were truly in control, this should have been a higher low. This should have kind of maintained the angle advance. The fact that it didn't suggests that there's still weak hands here. We lost the 200-day simple moving average with a lot of supply. So I do recognize that we're now maintaining this 200-day simple moving average. We broke out of consolidation here on strong volume with increased ease. So this is very bullish. But you gotta respect the breakdown. So I think the trade here favors longs.